You're listening to Money FM 89.3, and it's now time for Under the Radar with me, Chua Tian Tian. Now, today we're going to give you an overview into one of the world's largest privately held real estate investors and managers. Now, founded in 1957, Hines is a real estate investment, development, and management firm with a presence in 395 cities across 30 countries and 95 billion US dollars of investment assets under management as of the end of last year. The company has historically developed, redeveloped, or acquired over 1,600 properties with 203 developments around the world underway at the moment. With many APAC currencies devaluing against the US dollar, we want to find out what this means for the Houston-headquartered firm and its investors when it comes to expansion within Asia. We'll also have a look at some land development patterns and trends in urban sites within APAC and the opportunities they present for the company. Now, for more, let's speak to Ray Lawler, CEO of APAC at Hines. Ray, welcome to the show.
Hi, thank you so much for having me. It's great to be here.
Great to have you on board as well. So, Ray, before we get started, I do understand Hines is one of the largest privately held real estate investors and managers in the world. You're involved in developing, investing, and managing real estate. But tell us more about your value proposition and business model.
Well, thank you for that kind introduction and the overview of Hines. It's being a global firm, as you pointed out, we do have the advantage of seeing quite a lot. We see a lot of trends globally. With that advantage, we can use it to invest locally. So I think our first value proposition is really being a global firm, but with a really deep local expertise. The second thing we have is we're private. As you pointed out, we're one of the largest private owners and developers in the world. And with being private, we can take a very long-term view. And then finally, we don't only buy or build assets, we also own and operate them. And so we really play up and down that life cycle of real estate. And we call that in real estate, the technical term, being vertically integrated. So I think being private, being global, but yet local, but being quote unquote vertically integrated are really unique value propositions for our stakeholders.
So you do have funds that focus on investing in real estate and you do buy and develop them yourself. Okay, so let's talk about how Hines is present in 395 cities across 30 countries. Your AUM is at about 95.79 billion US dollars by the end of last year. But take us through your presence within the APAC right now. Which are the markets that you're focused in as far as Asia Pacific is concerned?
Right. Well, thank you. Yes, we certainly have a big global presence. And I do sit on the executive board for Hines and oversee the firm with my fellow colleagues globally. But as you point out, I'm focused on the Asia Pacific region, and I head up a market of 7 countries. We have 11 offices within those countries, and we have a presence in about 20 cities or so. And of the nearly 96 billion of assets under management, we have 6 to 7 billion here in Asia, the Asia Pacific region, and looking forward to increasing that percentage of the global AUM over time. I actually sit here in Hong Kong. And we have, in terms of the markets that we're active in, we have a strong presence in Korea, a strong presence in Japan, mainland China, Hong Kong, Singapore, Australia, New Zealand, and Vietnam.
And let's take a look at the wider business environment, Ray. The U.S. Federal Reserve has raised interest rates 10 times since March last year, and that's assuming that we are going for a pause or a skip tomorrow. But nonetheless, whatever the Fed has done has pushed up the dollar, and with currencies in APAC devaluing against the King dollar, what does this mean for Hines in terms of acquisition and development of real estate, given that you're based or headquartered in the US?
Well, thank you. And I always appreciate a question about interest rates or currency movements. And I'm consistently humbled that we don't know what's going to happen with currency movements or interest rates. What we know we can control is what we buy, when we buy it, and what we do with the asset. Obviously, currency devaluating does create short-term opportunities in the Asia-Pacific region, particularly for U.S.-based dollar investors. But that being said, we can't really bet on currency movements. We do invest in the best markets and the best real estate, and we really do focus on something we call alpha, which is really leaning into our ability to add value to the asset at the ground level, the nitty gritty of the real estate really. And then, interest rates sometimes cut our way, sometimes they don't. There are lots of things we can do to mitigate that in currency movements, but it really is about building and buying the highest quality assets in the best locations where we can add the most alpha over time.
And I think one point that we did miss out early on in the conversation is who would you consider to be your customers per se? Are they your investors? And if so, to what extent are your investors located within the US?
Right. Our customers is always a great question because as a real estate investor and developer, I have multiple customers. In the end, it is about our occupiers that occupy our assets, whether it's living, office, retail, logistics. But it's obviously our investor, as you pointed out. But it's also about the community that we're in. It's about the governments that we work with. And increasingly, for all of us, it's about the planet. And so our customers are numerous, and we really need to balance all of those as we think about the future of real estate and any product that we might do in any market.
Now let's look at the future of real estate within APAC in particular. What is the outlook ahead in the current economic climate? Are there any types of real estate that Hines is particularly interested in for the moment?
Right. The market is very moving different directions in each country. For example, in Japan, as you know, interest rates have maintained relatively stable and inflation is quite tame. In China, actually, interest rates have come down, and we're in more of a muted inflationary environment, or in some cases deflationary. Then markets like Korea, Australia, New Zealand, and Singapore have more moved similar to the West. And so every market's different, so it's very hard to answer that question. I could certainly answer it in one specific market, but what I definitely can say is we continue to take a long-term view. We continue to focus on the best markets, and we continue to focus on assets where we can really lean in and add value, whether that's buying land and developing, or whether that's taking an older building and turning it from quote unquote brown, where it's not a green building, to where it's green, where it's sustainable and actually lowering the carbon footprint of the asset itself.
So,
Okay.
Ray, take us through what is the outlook then for the real estate sector within APAC per se, amid the current economic climate? And are there any types of real estate that Hines is particularly interested in for the moment, say cold chain or, anything that's on your mind right now?
Right. Well, the Asia Pacific region, as we all know, is a big region, and each country is moving somewhat independently. Markets like Korea, New Zealand, Australia, and Singapore are moving more like the West. But with that being said, markets like Japan, they've held interest rates pretty steady, relatively low, and it's been a pretty muted deflationary environment there. On markets like in China, we've actually seen interest rates come down, and it more of a deflationary environment. So every market is moving differently. What I definitely can say though is the Asia compared to the West, the growth is quite significant. The world's GDP, a big piece of it is coming from the Asia Pacific region, and so the growth is undeniable. And investors are really seeing the benefit of diversification in their global portfolios. In terms of what we're really focused on throughout the region, as you pointed out, cold storage in certain markets are quite interesting. We have those type of projects in Japan, we have them in Korea, we have one in southern China, and we have a couple that we're looking at, or one that we have in Australia. And so logistics will always be something we're quite interested in. Build to rent in Australia is a product type that we're leaning in on. We think that's a once and perhaps a lifetime opportunity to develop institutional Class A sustainable living product for a market that's not institutionalized. And so the opportunities in Asia are vast. They're moving in very different directions, but they're certainly moving in a different direction than the West right now. And it definitely provides a diversification element for our investors that are looking for up and down the risk spectrum and multiple product types around the world.
And I do want to zoom in on your presence within Asia and Ray, because I understand Hines has this 1.12 billion US dollars open-ended fund called the Hines Asia Property Partners Funds. And you guys want to scale this up amid the current economic economic environment. So tell us more about the fund and how do you intend to scale it up then?
Right. Well, the fund's quite exciting, as you point out. We've raised a significant amount of capital into that fund, and we're deploying it in all the markets that I just outlined. We've made investments over the last 2 years in all of the major markets, and they're quite exciting. In terms of how do we anticipate scaling it, I really think it comes down to performance, which we're so far we're quite pleased with. And as we perform and deliver value to our investors, we know that it will scale over time. It is a discretionary fund. I know you're going to ask. So what that means is, as capital comes into the fund, it gives us the ability to deploy it as we see fit, and that surety, that speed, that ease of execution provides us a competitive advantage in the marketplace.
Okay, you talked about discretionary capital, right? And staying on Heinz operations within APAC, it seems like Heinz wants to strike a balance between discretionary capital and strategic partnerships. Now, I must admit that this is quite technical even for myself. So, what is the difference between discretionary capital and strategic partnerships? Why the need for the company to strike a balance right now through your fund?
Right. On the discretionary side, as I hit on, that is when investors, on behalf of their clients, put money in our funds and give us quote unquote discretion to use it as we see fit, as the market ebbs and flows, and we see opportunities in various markets. So that's what discretionary capital means. What strategic partnerships mean is when you go to an investor with a specific opportunity, a development, for example, like we might have in Korea or other places around the world, and we say we have this unique opportunity, or we have a programmatic, thematic, scalable, strategic idea that we would like to capitalize with you, but we'll make the decision together. The reason you want the strategic partnerships is a lot of these developments by definition are quite large, require a lot of capital, and they could, if in a discretionary fund, just simply be too big for the fund, given the size. Because the key to a fund that's discretionary is you want it diversified, both in product type and location, but also in capital allocation to various geographies.
So you need more discretion in that regard and more diversification per se. If you're just tuning in, we are now in conversation with Ray Lawler, CEO APAC of Hines. And meanwhile, Ray, let's take a look at some land development patterns and trends in urban sites within APAC. What are the top one of two trends in the arena? What opportunities do they present for Hines then?
Right. Let me give you three, Tian Tian, because there's really three that always jump to my mind when I think about land. One is the age-old saying, location, location, location. Land is really about where you buy it. And so that's always incredibly important. The second thing that really ties into the location piece is a good piece of land is highly amenitized, it's adjacent to transit, and it provides an urban infill opportunity that's mixed use. That's another key piece. And then finally, I think everybody should know land is always the first to fall in a downturn in terms of value. And the reason is when interest rates go up, so your debt costs go up and your cost to build go up. So you have inflation like we do now, and you have interest rates going up. The first thing that moves is land, and it goes down. And so people always holding land, need to take a long-term view. Land speculators sometimes get pinched in this point in the cycle. But with that said, it also creates opportunities if you have the capital, and it fits the first two, which is location, highly amenitized, urban infill, next to transit.
So given the current environment, the business environment that we are in, high inflation, etc., are you seeing an urban sprawl when it comes to, more suburban areas coming up, more property developers going towards suburban areas, or you guys investing into suburban areas as well?
It's interesting in markets in Asia, because the public transit system, majority of the markets we operate in, like Hong Kong or Tokyo, that we're talking world-class transit. We're always looking at opportunities on transit stops. But I will say, generally speaking, we call them supply-constrained markets, where there are barriers to entry because of the geography, are always more interesting than markets that do not have those barriers. So clearly markets like Singapore, Hong Kong, Tokyo, I mean, the list goes on and on, by definition have very significant natural and physical land constraints. Those markets in terms of urban infill land are usually more interesting, where there isn't any limit to building out, if you will. And you see that where there's no constraints in future supply, the land by definition in development is usually more risky than ones where there are significant constraints.
Okay. And while we are on the topic of urban development, Ray, let's talk about Hines's T3 or Timber Transit and Technology concept. Quite interesting here. You guys are pioneering commercial mass timber buildings and office developments using wood to build houses. So, you've recently launched the firm's flagship T3 Collingwood in Australia as well. So tell us more about this concept. How much money is it for you guys to explore the idea of using mass timber for buildings and office buildings in particular?
Well, thank you. I love talking about T3. It's a personal passion for mine. On the personal side, I actually grew up in the woods. Literally, I grew up in the countryside in central Pennsylvania in the U.S. And so that was my happy place, being in the forest. And so to see Hines bring timber, wood to the built environment really gets me excited. So I just want to say that. In terms of T3, as you point out, it stands for Timber, Transit, and Technology. The timber is simple. We're using sustainably clean, green timber to build products. And by definition, that timber it keeps the carbon encapsulated in the wood. And so, for example, we have a project in Melbourne, T3 Collingwood, that is 34% less carbon than a traditional steel or concrete structure because we're using wood in it. So the timber piece is key. The second is really timber, then transit. Transit really hits on your question around urban infill land. By definition, we want to build these assets next to transit in highly amenitized areas, because if people take transit to work, they have a lower carbon footprint. And obviously walking to various amenities is good for the environment and good for the individuals. And then the final piece to Timber, Transit, Technology, T3, on the technology side, we're living in a digital age. I mean, I'm talking to you right now, via Zoom. And, I have a couple teenagers. I watch them every day. We are building these assets for them, these projects, and they are physical and digital at the same time. And so the technological piece, we cannot understate. And so it's a really exciting product type. We're actually, the one in Melbourne is one of 26 we have going globally. I think that makes us the biggest timber developer across the world with those projects, and quite excited about it. And I will just say on another personal note, I started with me growing up in the forest, but I'll finish with this. I just visited T3 Collingwood in Melbourne. It was so fun. I walked in, and in a traditional building, you walk in and you're certainly not doing these three things that I'm about to say. You walk in and the first thing you do is you smell it. You can literally smell the wood. It's so unique. And the second thing is you see it and you look around, and it's just so different because you feel like, you're almost in a treehouse in a way. And then finally, in Tian Tian, if we walk in it together someday, the next thing you'll do is you'll touch it. And I promise you won't touch steel or concrete. So it is a really unique, innovative, forward-looking product type built for the future, built for our children, that really addresses sustainability, location that you asked around urban infill sites, and then technology. So we could not be more excited about it. We think it serves as a real good blueprint for us to do in other markets, hopefully Singapore, by the way, but also just throughout the world for our peers, to do more of this, because I think it is the future of construction.
And Ray, don't mind me asking this. How much money is in that treehouse for you guys?
Well, certainly we are a for-profit organization. You asked me about our stakeholders. One is our investors, and so we need to think about our investors. So we're not building these for charity. But the great thing is we can serve our investors and make money, but at the same time, our occupiers. I went through the benefits there, but obviously local governments and find it compelling as well. And finally, it's just great for the planet. So it is, when you had asked, who our customer is, I think T3 really addresses the needs of all the various constituencies quite well, which we can't say for a lot of other investment types.
Okay, and one quick one before we let you go, Ray.
Yeah.
Aside from the T3, what are some future plans for the company in the second half of this year? What can we expect here in Singapore?
Well, I'm very excited about Singapore. We've scaled our team up there quite significantly. I'm there often, and my partner Kian Fung Lim is leading the charge and looking at various great opportunities. We have our first logistics asset there. Also, we will continue to look at that market very carefully. In terms of the Asia Pacific region, which I'm responsible for, I endeavor that we are a third of what Hines is doing. And so, we had talked about, you had started out about Hines's AUM, and then, I shared where we are here in Asia. It's not necessarily about being bigger, but I do think the growth in Asia is undeniable. And so, I would think the future, well, what I could say is, I would endeavor that we in Asia Pacific region are a third of what Hines is doing, which provides quite a bit of runway for my team, for our partners, and really for all of our stakeholders throughout the Asia Pacific region. So pretty excited about the future.
Very exciting plans indeed, and targets as well. So thanks a lot, Ray. That was Ray Lawler, CEO of Asia Pacific at Hines. Thank you very much for joining us on Money FM 89.3.
Money FM 89.3.